The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
So what's first mover without a little bit of markets? We got to talk that now with, and joining us now is to talk about crypto markets is Emin Gun Sirer. He's the founder and CEO of Ava Labs in New York. Welcome. If you guys know what Avalanche is, welcome, Emin.
Hello, good morning.
Hi, how are you? So, I got to ask you, you have a
happy birthday to you all. And
thank you.
Thank you.
Thank you. 16, 17 more years and we will be able to drive. Of course, a lot of DeFi runs off of Avalanche. So what are you seeing right now happening in the markets from your perspective? It's a very unique perspective to be in. What do you think is going on recently? We saw this downturn and now a bounce. How is it affecting you, for instance?
So let me give you a little bit of information about my vantage point. I used to be a professor at Cornell University until very recently. And that put me in a unique position where people come to academics right before they enter the market. So I've had a chance to see and foresee the big boom that we had about a year and a half, 2 years ago. I knew that the hedge funds were coming before 6 months before they came in. Right now, I would say that about, again, 6 months ago, I started hearing from sovereign wealth funds and pension funds, mostly Canadian pension funds because their legal infrastructure is different, but they're coming. So there's more institutional money coming into the space, and it takes a little longer for these entrants to actually make their appearance on the scene. Because of the various different regulations they're under. But they're coming, and the space is going to grow. So I'm really, really bullish in the long term. And these, occasional corrections, these bearish downturns, they're actually very good. If you're in the business of building infrastructure, some of this taking the froth out of the market is great. It's also a great way to differentiate the coins that work from the ones that don't.
Really fascinating what you say about the sovereign wealth funds. That's the first time I've heard of that coming in, after the hedge funds. But I wonder, can you detect market manipulation at all when you see these volatile price swings and thin volumes?
Market manipulation is something beyond my expertise area. I'm a distributed systems expert, so I build infrastructure. We build, working blockchains, and I'm behind the Avalanche blockchain. So what happens in the markets, manipulation, etc., that's beyond me.
So it might be beyond where your scope, but nonetheless, do you think that some of what goes on in DeFi, do you think it either helps combat it, or do you think there might be a little bit of a problem even in DeFi where big players can potentially push around the price of coin?
Oh, so from a technical perspective, I can speak to market manipulation and traces of it. So let's actually talk about that for a second. Often what happens in this space, in our space, is as we go to regulators and say, hey, we would like to do this, that, and the other, they come back to us and say, hey, your markets are not fair and square. They are manipulated. They have this problem, that problem. And to some extent, historical facts point out that centralized marketplaces do have issues. We saw this with various lawsuits against various markets in the past, and we saw it again with the Mt. Gox collapse and so on. The OGs who've been in this space know that some of the historic facts did take place. But these assets lend themselves to things that Wall Street cannot do. We can build decentralized exchanges that are free from manipulation. We can build trustless exchanges that rule out categorically by building rules into the fabric of the network that the regulators are concerned about. So whereas Wall Street is based on post-facto auditing, we can build things that are correct by construction. So that makes me really bullish. And I think that puts us in a very good shape to actually address and combat these issues.
Maybe Emin.
The last issue that they might have with DEXs is that the DEXs lend themselves to what we call MEV, or what some people call MEV, which is extractable value by participants to the system. This is a form of, this often occurs in the form of front running. It might occur in the form of sandwich trades and so forth. And there are now ways to actually combat MEV as well. There are chains whose protocols are so fast that the MEV opportunities are lower for the participants. There are also techniques that people are employing so as to reduce the MEV that's available to insiders. So I'm really, really proud to be part of some of this. The Avalanche system is really, really fast and allows us to extract or to reduce the amount of MEV available to the participants. And also we're working on brand new exchanges and dexes and new structures on top of us so as to reduce those. So very soon we're going to find ourselves in a position where we turn to the regulators and say, we are way ahead of you. Everything you want to do, we can do better.
So maybe, Emin, it'd be helpful for our audience to understand, maybe you can give a quick explainer of what Avalanche is.
Oh, Avalanche is a new blockchain, a new layer one. It came out of Cornell University about a year and a little bit ago. It's a brand new mainnet, and it's based on a couple of groundbreaking ideas. One of them is a brand new consensus protocol that scales. It's unlike every other system out there. It's the third biggest breakthrough in the space of distributed systems. The first one was what we call classical protocols. The second is obviously proof of work and Nakamoto's brilliant invention. And the third one in this space is Avalanche. And the second big idea behind Avalanche is its notion of subnets. It's not a single monolithic one-size-fits-all solution, but it's a solution that allows anybody to start their own blockchain with their own rules. This allows regulatory compliance to be built into systems. It allows institutions with high-value assets to put them on the blockchain, to digitize their valuable assets in a manner that's compliant with whatever jurisdiction they're in. So that has allowed us to create the kind of system that accommodates jurisdictional differences. And our goal, unlike everybody else in this space, is not to try to compete with the dollar. It is not to build a computer in the sky. It's to digitize all things. We are an asset digitization platform, and we have the architecture and scale necessary to tackle the 700 trillion worth of assets out there.
Hi, Emin. It's good to see you. I haven't seen you in a while. I wanted to zoom out for a moment and ask like a very big picture question about crypto, since you've been in the space for such a long time. And I think the last time I saw you was a few years ago in Singapore, and we talked about the decentralization problem. And I'm just curious, like, what your thoughts are on that now, because there's been a lot of controversy, for example, over Web3, right? You have some thought leaders saying that Web3 isn't really decentralized and that it's too backed by venture capital. Then you have the whole institutional adoption question, which in some ways is a good thing, but also could be seen as more centralization. So I'm just curious, like, from your standpoint, what is the status of decentralization in crypto right now? Do you think it's getting better? Do you think it's getting worse? What's your take?
So if you look at it from the perspective of a regular person who is used to Web 2 services, if you're a regular user of Facebook, if you're a regular user of Google, where we are essentially just webs and we're beholden to people who run the services, there is a huge step up, a huge step forward. Now, if you look at it from the perspective of a crypto native OG who's been around for some time, well, we're seeing a different trend. We used to have Bitcoin, we used to have systems like Ethereum, now we have systems like Avalanche, Solana, Luna. And so suddenly, and then now what we're seeing in addition to these is the emergence of essentially company-specific chains. So I'm not going to name names here, but there are chains essentially that are essentially decentralized in name only, where all the validators are run by the same set of folks. There is really a true center behind the scenes. When it comes to DeFi protocols, we see a similar situation. There is governance in name only. All the tokens are held by a handful of actors. So these are really problematic, depending on your view. I'm an optimist, and I like to see the glass as being half full. I think people are converting away from centralized platforms towards platforms that give you better assurance and better transparency. Even these single business run chains are actually better than what we used to have, which is you trust the entirety of your wealth to a custodian. So that's a step up, and it's a great starter point. And I think people who taste that will go on to truly decentralized platforms like Avalanche, where they can be assured that there is no single party behind the scenes who could censor transactions, revert them, and so on.
I'm going to guess that the blockchain you're talking about rhymes with finance smart chain. But nonetheless, how do you differentiate? How does the market differentiated Avalanche from these other players? And what do you think the market is getting right, and what do you think the market's getting wrong?
That's a great question. So Avalanche has seen enormous growth in, I would say, the last 6 months or so. Back in August, we had TVL of only 200 million. Now we have $11 billion in TVL. We used to have, the users were not that many in number. We now have about 1.8 million users with about 800,000 monthly actives. So that's been great growth. In addition, we have hundreds of dApps deployed with many, many to come. So the market is obviously seeing the value of a fast, cheap, reliable blockchain, a layer one that just works. And in the months, in the weeks prior, where we had market volatility and we saw some failures, Avalanche kept on ticking, and I think that's given people a lot of confidence. If I look at some other market data, if I look at TVL per market cap, I see that we are actually one of the lower ones, and that's actually interesting. That gives me, that tells me that perhaps the market hasn't quite yet understood that there's a discrepancy there, that this thing is actually pretty different, and the same valuations, if applied, would be pretty nice actually. So that's, I think, one of the things that the market gets wrong. The various other things that the market gets wrong, as you know, are the differentiation between these systems. They look at a system like Avalanche, they see the smart contract platform, and they think it's very similar to Ethereum, which it is. But Avalanche has a different architecture. Our contract chain is just one of many things we can do in parallel. We have 3 different chains in parallel at the moment, and we can have any number of additional ones deployed. So we're strictly larger than the other chains out there. So I think there is a little bit of information asymmetry there, and as that gap closes, it'll be interesting to see what happens.
I mean, just to close, I'm curious what your outlook is for Ethereum maybe over the next year or so, just in the sense that Avalanche and other chains are sort of not reacting, but offering alternatives to Ethereum and addressing problems that Ethereum can't solve. And so there's sort of like different takes on Ethereum. Some people are like, this is going to be Ethereum's year. It's going to like finally, come into its own. And then there's others that are like, no, it's actually going to go downhill. I'm just curious, what do you think is going to happen with Ethereum over the next year or so?
So here's what I think. I think there's tremendous growth ahead, and the chains that come out ahead are going to be the ones that can absorb that growth. Ethereum 1 in its current form is unable to absorb that growth, and Ethereum's future plans, its roadmap, is based on layer 2. They are throughput-oriented, layer 2-oriented system. Now, as they explore that path, there are some risks ahead. One of the big risks is that as they switch to layer 2, they end up turning over all of the MEV on their dApps to single entities. Whoever runs those layer 2 services ends up being in a prime position to front run their users, to sandwich their users, and so on. So it's going to be very interesting to see how they manage that. And layer 2s are going to be a profitable business potentially for the people who operate them, but they're going to be that profit is going to come at the expense of the users on those systems. In contrast, I think the layer 1 approach, scalable layer 1 approach, is a system, yields systems that are democratized, that are open to all, where the MEV is not in the hands of a single entity. We run as a space the risk of reinventing everything that exists in TradFi. And so it's incredibly easy to come up with a roadmap that takes your very nice system that has some flaws, that has, for example, a scalability bottleneck, and in the process of trying to scale it up, you end up reinventing the system as we know it. You end up reinventing the front running, the Citadels of the world, etc., the HFTs of the world. So that's one of my big worries. And ETH2, with its sharding approach, whether or not that will happen, ETH2 will end up happening in some form, but the sharding vision seems quite far. There are quite a few unsolved scientific problems. Mm-hmm. That's from my perspective, but Ethereum is still going to grow. There is so much interest and there's so much value in smart contract platforms that this area is poised for tremendous growth. And I think, as I said, the winners here are going to be those who can absorb that growth.